Gold prices and interest rates. What is the relationship? As an investor, you may have noticed a trend. When real interest rates rise, gold prices tend to fall, and when they drop, gold prices often increase. This inverse relationship seems straightforward, but it's not always that simple. There's a complex interplay at work here that can be influenced by a myriad of factors, some of which may surprise you. To read the full article right now, see the link in the video description. Also, to find out whether your savings are keeping up with a higher cost of living, see the link in the video description to access the free Inflation Retirement Calculator to make sure you are on track. The negative correlation explained. While it may seem counterintuitive, the negative correlation between real interest rates and gold prices is actually a fundamental aspect of financial markets, with rising rates typically leading to a decrease in gold prices. This seemingly strange relationship boils down to the opportunity cost of holding gold. When interest rates rise, the cost of holding gold, a non-interest-bearing asset, becomes higher. Why hold gold when you could invest in bonds or savings accounts and earn interest? However, later in this video, we will provide a means of investing in gold that actually provides a real interest yield that is competitive with traditional bonds. Stay tuned so you don't miss it. Let's delve into the numbers. Historical data indicates that during periods of high real interest rates, such as the early 1980s, gold prices experienced a significant downtrend. Conversely, during periods of low or negative real interest rates, like the post-financial crisis era, gold prices soared. This is no mere coincidence. It's a clear demonstration of the inverse relationship between gold prices and real interest rates. But it's not just about the rates themselves. It's also about the market's expectations. If traders expect rates to rise, they might start selling off their gold in anticipation, driving prices down. Remember, gold is often viewed as a safe haven asset. In times of economic uncertainty or low interest rates, investors flock to gold, pushing prices up. When the economy stabilizes and rates rise, the rush to gold subsides and prices typically fall. Understanding this relationship can help you make informed investment decisions, such as gold investment entry points. Buy low, as the saying goes. Impact of negative real interest rates. In the realm of financial markets, experiencing negative real interest rates can profoundly influence the price of gold, often driving it upwards. When the inflation rate surpasses the nominal interest rate, negative real interest rates occur. Despite gold not bearing interest or dividends, creditors are more inclined to buy gold in these circumstances. It serves as a wealth store, preserving purchasing power when real interest rates dip into negative territory. Historically, such scenarios have had significant impacts on gold prices. In the second half of the 1970s, inflation outpaced bond returns, causing investors to divert their capital into gold, leading to a price increase. Another example occurred in 2001 when the Fed reduced nominal interest rates to zero, and gold prices simultaneously skyrocketed. Understanding these changes in real interest rates is crucial for movements in gold price. The most substantial gold market booms have occurred in negative real interest rate environments, as evidenced by the 1970s and 2000s. Conversely, when the Fed hiked expectations in 2015, causing U.S. real interest rates to rise, gold prices fell. However, even in times of low real interest rates, such as the secular bear market in gold during the 1980s and 1990s, gold prices can still gain when real interest rates are moderately positive. These examples highlight that low, positive real interest rates don't necessarily lead to lower gold prices. Other factors, such as economic stability or uncertainty, can have a significant impact on gold prices. More recently, the record mass purchases of gold by world central banks in the past 5 to 10 years, increasing geopolitical instability, and the collective doubt as to the accuracy of the U.S. government-provided inflation figures have continued to push the price of gold higher. It is worth noting that the most recent record gold price boom has occurred despite the high rates held by the Federal Reserve. Hence, there are always exceptions to this conventional gold price interest rate relationship. With the anticipation of further rate cuts, this will continue to push the price of gold as well as silver. Therefore, it's critical to analyze the broader economic and geopolitical context when considering the relationship between real interest rates and gold prices. To take advantage of the wealth-preserving benefits of gold investing and earning a competitive yield, Monetary Metals provides the best of both worlds with their fixed income investment products. Monetary Metals is a gold investment company that pays their clients earned interest on gold, paid in gold. To find out how to earn 2 to 4% interest annually on Monetary Metals gold leases, see the link in the video description to be taken to Monetary Metals' official site to get started today. A tax-advantaged way of owning physical gold without the stress of storage in your own home is a Gold IRA. Working with a long-established and trusted gold investment company that has studied and actively monitors the various economic cycles, central bank policy shifts, and the various movements of the markets, these Gold IRA companies can provide serious gold investors with competitive prices, transparency, a reasonable buyback policy, reliable customer service, and more importantly, robust security and storage of their precious metals. However, finding the right Gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a Gold IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices, then Augusta Precious Metals would be a good fit. Furthermore, Noble Gold Investments provides Gold IRA as well as private investment options for home storage. See the links in the video description to find the right Gold IRA company that best serves your needs. To conclude, there's a complex dance between real interest rates and gold prices. When rates climb, gold prices may fall, yet when rates dip, gold becomes a beacon of security. But remember, it's not a simple rule. Other factors can sway this relationship. History and the present-day economic and geopolitical climate show exceptions too. So, keep an eye on those real interest rates. They're key to understanding gold's value, especially during low-rate periods. It's a data-driven dance worth mastering for your investment strategy. If you have a minimum of $100K in savings to protect and want to take advantage of the most competitive gold prices, see the link in the video description to attend a free gold investment webinar hosted by Augusta Precious Metals. Reserve your place today. Thank you for watching.